Okay, let's go ahead and process invoices that we will pay with check using our general bank account. And these are invoices for January. So here we are. First one we have rent and we have deposit for rent. So let's go ahead and do those. Vendors, enter bills. We're going to do it that way. All right, and the first one is from DeCre properties. All right, for reference number, we're going to use invoice number. Let's see, amount due 18,000. Oops, not 180. That would be an overkill. Now, this amount has two portions to it. All right, so one portion is easy, that's rent expense, right? And that's $6,000 that we pay monthly to our landlord, and that would be January 2021 rent. But we're also starting the business, and we're putting this money as a deposit. It is not an expense because technically we still have title to that money. All right, and that deposit is an asset. I've seen people make that mistake. I've seen people make that mistake on both ends. The landlord does not recognize this 12,000 as income because again they have not earned it. And we do not recognize this as an expense because again we still have title to these funds. So they have to be booked separately. So that's deposit. All right, let's go ahead and reflect it. What's going on here? Well, again, right now we're not paying, we're just entering this bill, right? So what do we know for that? We know that it's an accounts payable account, which is 20,000. What's going on with it? It is going up. Overall, $18,000 is added to amount of money we owe to DeCre Properties LLC. What else is happening? Well, we also have rent expense. All right, that's going up. That's for January, and we also basically with this 18, we have an asset. We converted cash into this $12,000 deposit asset. Now, for cash based taxpayers, these are not recognized until the checks clear. All right, just kind of side note. But again, in our simulation, they will clear, so it's fine. But again, for now, here we are. What we're going to do is, again, book it this way. So what's happening here? Let's go through it one more time. This $18,000, right? It is a credit to account 20,000. It is not depicted here, but it is implied. All right, again, that's the QuickBooks interface that makes it super easy for us. But again, as accountants, as bookkeepers, we need to know that. And then 18,000, again, being credited to account 20,000, is broken down into 67,100. Rent expense goes up. Expenses go up when debited by $6,000. And red deposit, which is an asset, because again, we still have title to that money. Even though they're in the possession of the landlord, they hold it as a collateral, essentially, that we don't do anything bad to the property. Once the rent is over, once the lease is over, if all is well, we get our money back. So it is our money held by the landlord. So it is an asset, 17,100, and it goes up because it is debited, right? Assets go up when debited. So we're going to record it, saving new. Date, sorry, title, right? They usually do at the beginning. So they bill us at the beginning of the month. That's saving new. All right, next one is insurance. Gotta have insurance, right? So let's go ahead and do that one. Now, with insurance on large policies, right? On large, especially non-cash based taxpayers, right? Accrual based taxpayers, they can capitalize it and then expense it as time goes on. So this way their balance sheet looks better, but we don't need to do that. So we're just going to expense it. So insurance for all, 1/5/2021. Reference number is going to be our invoice number. All right, terms net 10. That add new. All right. And it is due in 10 days. They're very easy to set up terms, and we'll do it in some of our simulations. But again, that does not affect debits and credits, so it is not as interesting for these purposes. Okay, what do we have here? Well, we know that our accounts payable account will go up, right? And oops, sorry, wrong place. Our accounts payable account will go up, and liabilities go up when credited. So the whole amount, 5,100, will be credited to our accounts payable until we pay it, right? So 5,100, this amount is a credit to account 20,000. Now 20,000 is not depicted here, but it is implied. The rest goes into insurance, so let's allocate it. We have workman's comp insurance at $95. We have health insurance at 3,007, and we have dental. And if you remember from our payroll, we did not withhold money from our employees for insurance, so we cover it completely, right? So for us, it becomes expense. We do not get anything back from our employees to compensate us for this. Very nice of us, right? Very nice of us. Here it is. All right, make it a little bit bigger. All right. Just so you can see. All right, here it is. Maybe make Memo a little bit bigger too. So here it is, right? We basically entered this invoice from Insurance for All. What's happening? Accounts payable went up by 5,100. Our expenses, right? And we're using sub accounts here. Again, it's common practice to aggregate them for reporting purposes. And in this case, we can demonstrate makes no difference as far as debits and credits. It's just, how do you organize? So here it is. Voila. Debits and credits equal each other. They have to, sum of them has to equal each other. All right. And then what do we have? Well, again, these amounts right here, they're debits to this account, right? The top account never actually, it's not what we call non-posting account, although you could try and force it to post into it, but technically you're not supposed to, because again, the sum, the insurance expense is sum of all the sub accounts. And again, we have 63,370, 320, 360. Here they are. We allocated them accordingly. And then again, the question is, how did we pay for it? Well, we essentially, for a short period of time, accounts payable, we borrowed from Insurance for All, right? They're financed our insurance. Again, with cash-based taxpayers, the policy probably is not active until the cash is received, but and the expense is not valid for IRS purposes until the check clears. But anyway, let's go ahead and book it. Save and new. All right. You have changed the terms, yes. Postage solutions. Again, one of those, it's a prepaid postage. If it was large, we could book it as an asset and then basically deplete it as we go, but it's only $35. So it is fine for IRS purposes and for accounting purposes to treat it as an expense. People ask me that question and I would say, yes, if you deposited $35,000, then perhaps, you should book it as an asset and then track depletion as you essentially print those envelopes with stamps, and then eventually you would net 10, and then eventually you would deplete it. In our case, It has only $35. We can go ahead and postage and delivery expense. Here it is, right? We just got an invoice from solution that, essentially provides, those postage printing stamps through machine. And then again, we can essentially deposit more money with them and print more envelopes. But again, even though at this point, right, we deposited $35,000, if especially if it's refundable, it's still our 35,000. I mean $35. If it was $35,000, we would have treated it as an asset. But because it is just $35 at this very small amount, we expense it right away. So here it is. Let's reflect it. 20,000. Accounts payable goes up. Expenses go up as well. But again, these expenses technically will hold here until the check clears. Once we pay it and check clears, then they're recognized for the purposes of IRS. But for accounts, debits, and credits, it is what it is. That's taking place right now, right? Our expenses went up and our liabilities went up, right? So this 35 is a debit to 66,500 and it is a credit right here to 20,000. Still as adjusting to terms. We're still in January, right? We're still kind of our first January. All right, we have more insurance. And again, we're going to expense it. There is a lot of insurance involved in running business, right? So this kind of also shows you quite a bit on. Here, let's deal with the previous ones. We have proper business insurance, property insurance. Yep, that fits. Amount 1750. And we have practice insurance. Insurance. Professional liability. That's the same as practice insurance. So, okay, here it is, right? Again, what's happening in terms of debits and credits? So at this point, when we enter the bill, we could, I mean, if we just entered the check that was clear, we would hit our bank account, right? In this case, it goes through accounts payable. So here it is, accounts payable, it goes up because it's credited. And then we're expensing. Wait till we get to February when we're billing clients. We're gonna deal with accounts receivables. Oops, I used the top account. My apologies. Here it is. All right, debits and credits are in balance. That's what we're going for. That's very important right here. All right, what else is happening? Well, let's look at the interface. Very important to understand. 5,500 is a credit to account 20,000. 1,750 is a debit to 63,310, and 3,750 is a debit to 63,350. Why are they debits? Because they're expenses. Expenses will go up when debited. All right, let's click that and go to Save New. All right, cable company, right? That's very important. Same thing. Right, we can clear this, we can clear this. All of it goes through accounts payable. We can put 335 right here. All right. And again, this simulation will be available via Amazon as a printed book. So this way you can, essentially go ahead and follow it along with us. And if you have Amazon Kindle Unlimited, you'll basically continue to enjoy this free of charge. Anyway, what do we have? We have high-speed data, so that's computer and internet expense. Let's see, 175. Then we have security. 75, and we have telephone. 85. Excellent, right? We booked that. Again, everything balances. Let's take a look. What's going on here? Well, again, this amount, 335, is what? Credit to accounts payable, 20,000. And these amounts are debits respond to 1700 68200 8. Right? Let's allocate them. Awesome, right? Debits and credits are in balance. We're good to go. We made it all work, and that was the purpose. All right, saving new. We have mobile services for our cell phones. Again, same thing. It goes through accounts payable. That's 690 for 3 lines. We have 3 employees. 3 people. All right, so mobile services, and that's 125, 2021. All right. That's telephone expense, not mine. All right, 690 goes to accounts payable. We owe some money because we haven't paid it yet. And then our expenses, in this case, telephone expense goes up, expenses go up when debited. Liabilities go up when credited, that's what we have, right? Our expenses went up, our liabilities went up. Makes perfect sense because we haven't paid it, so we owe that money, but at the same time, our expenses went up. Let's go ahead and save and close this one because this is our last invoice for the month of January. And then we have a credit memo, right? That's fun. That's fun. We get to enter a credit memo from our Tri-County Cable, and what it is, it's a bundle sign-up rebate, right? So we signed up for security, phone, and internet. All right, they give us some money back. How do we book it? Well, through vendors. Again, enter bills. Just like with credit cards, remember I told you, click on credit and everything switches around. All right, Tri-County Cable. Why is it important? Well, it's important because, stay with us, I'm going to show you when we pay the bills, this credit memo will reduce the amount of money we have to pay, right? It will reduce our expenses. And that's why, again, it's important. All right, date, let's enter the reference number. So people ask me, well, what do I do with credit memo? Well, the question is, what is this for, right? And we have 3 types of expenses it's affecting, right? We have security, we have internet, right? And then have telephone. So we could allocate it proportionally, or we can go 50 bucks each. It makes no difference because, again, from standpoint of IRS, all we're doing is we're reducing our expenses by 150. The way we allocate it is irrelevant. If we did really hardcore cost accounting, it would matter. We would probably do it proportionally. The way I see it, let's just allocate it 50 bucks to each. So we have our security. Again, when you don't need it for certain purposes, don't overkill it. As a matter of fact, we could have put it all into security, but or internet, right? 50, and then we have the telephone, right? So those are the 3 items that we purchase in our bundle. We just throw 50 bucks at each one of them, and it's fine. Again, we could have done it proportionally around the percentages like we allocate shipping and handling and tax. I don't see the need for that as an accountant. We're perfectly fine. What's important here is to understand debits and credits. What's happening here? The amount of money we owe to Tri-County Cable is reduced by 150. Accounts payable is reduced by 150. How do we reduce liabilities? We debit them. Here it is. What else is happening, right? Expenses are reversed now. Remember, just like with credit cards, by clicking from bill to credit, everything is reversed. So now these windows are actually credits to those expense account. Here it is, right? We could have again put it all 150 into one of them. From standpoint of taxation, it doesn't matter. From standpoint of cost accounting, it matters very little because the amounts are tiny. If they were large, we would probably do proportional allocation. So again, let's go over it just to solidify by clicking this button. Things changed. This amount is now a debit. Remember, if it says bills, it would have been credit. Now it's a debit to accounts payable account 20,000. Debits reduce it, so makes sense. We got a credit memo from a vendor. It reduces the liability. What else is happening? Our expenses are reduced, right? In this case, we reduced it by 50 bucks each. Security services, 50 bucks. Computer and internet services, 50 bucks. And telephone services. So these accounts, they're expense accounts. In this case, they will be credited because credits reduce expenses. Right? Let's go ahead and save and close it. And that's it, right? We're done booking credit memos, we're done booking invoices. Now, what do? We pay invoices. In this simulation, we do a lot of times we would pay it in the following months, and this way we would have accounts payable balance at the end of the month. We will do it in the future simulations. For this simulation, again, we want to demonstrate a little bit more emphasis on debits and credits and not so much on the timing of things. So again, we're going to do it in the same month. So what do? We're going to pay DeCre properties. And you see it's the same invoice, but here it has a paid stamp that indicates when we paid it. All right, let's go ahead and pay our bills. Vendor. Pay bills. All right, DeCre property. Here it is. Here's our $18,000 bill. All right, here we have to check the check. We could pay it with credit card, and we've shown it before. In this case, we will pay it with check. The date is 1/11, so we're going to change it from what they have here. All right, to be printed. All right, well, in this case, we already have the check number, or we can print. It doesn't really matter. We can do it both ways, right? So what we'll do is in January, we'll print those checks. And then in February, we can assign the check number. So to be printed, again, general account right here. Until it prints, there is no impact on GL. So that's the important part. So let's go ahead and pay selected bill to complete the cycle. DeCre properties. All right, print checks. All right. Checks to print. First check number is 1001. Okay. Here it is printing, and then we'll show debits and credits behind this printing. All right, so it's asked us to print. We're going to have it printed. All right. The check printed came out correctly. All right, we're all good. Here it is. Now, if we go into banking, write checks, and you'll see that check. Here it is, right? So it wrote the check, so we paid it. Again, what happened? In this case, again, remember, the expense account is no longer affected. We affected the expense account when we booked the bill. At this point, all that happens is that there's a conversion from accrued to cash. Right now, we recognize it. But again, at this point, all that's happening is $18,000 is reduced. Our accounts payable liability is reduced by $18,000, and our bank account, right? General bank account, 10,100, is also reduced. And being an asset, it's reduced through credit. So here it is, right? That's the general account, right? It's already booked. It's see, right here. It's paid. We're not going to change anything. We just opened it to show that it took place. And when we paid that bill, remember what happened was, as our bank account got reduced by $18,000. So it's a credit. So this amount is a credit to this account. And this amount is a debit to accounts payable. accounts payable. Please remember that. All right, because again, if we just book the check, we would impact, especially retroactively, or we just wrote the check, we would impact directly our expense account. In this case, the expense account, if you go back, was impacted when we booked the invoice from the vendor. All right, so this one is good. We paid it. Go ahead and close. Clear this. By the way, the impact will always be on these two accounts from next bill. All right, let's pay multiple ones for kicks and giggles, right? So again, vendors, pay bills. Let's see if we can pay. So we have insurance for all. What else we have? We have postage solutions. All right. Let's pay those two because we can actually demonstrate debits and credits on one page there. Yeah. So we're going to pay these two bills, and they paid on the same date, just different checks. That's good. So again, the date is 1/12. All right, check to be assigned, general. All right, good. All right, let's pay selected bills. There they are, the two bills, right? The postage and the insurance. All right. Checks. Okay. First check, 102. Second check is going to be 103 by default. Okay. Print. All right, let's see what's happening. Yep, they printed correctly. We don't need to reprint them. Okay, so accounts payable is reduced in both cases, so we can get that out of the way, right? And the rest is easy. I told you right now at the beginning, when we pay bills, only two accounts are impacted. Accounts payable and the checking account, because that's what we're using to pay the bills. No brainer. All right. Here they are. Again, you can see that this equal and this equal because it's one line, and this is for this transaction, paying the bill, and this is for this transaction. Again, accounts payable is reduced by $35, and the bank account is reduced by 35 when we print this check. Again, I'm just going to show you the checks. So here they are, right? Postage solution, insurance for all. Right, here they are. Here are all those checks. Beautiful, right? And that's how you do it through accounts payable module. Again, we've shown you how you can book it basically directly as a check, and we'll show it in the following month simulation just to revisit it, because again, as we always say, practice makes it perfect. All right, let's close this out. Close this out. What else we have? We have another insurance bill, and cable bill, and phone bill, and those are on different dates. So we're going to pay them separately. Now, so vendor, again, pay bills, again, insurance for all, check, 22nd. All right, check balance. All right, what if assign check number? We're going to assign the check number. We're going to print it, right? Let's say we wrote it by hand, and then we're like, oh dang it, let's book. So we're going to pay selected bill. Let's put it down. And it's asking us right here for the check number, and we know it from the simulation material that it is 1004. Okay, that's it. Now in this case we don't print, right, because we wrote it by hand. We just say done, and what we know is that again, accounts payable was reduced. Accounts payable is a liability. Liabilities are reduced when debited. So here it is. And the checking account got reduced, and checking account is an asset. Assets are reduced when credited. So done. Let's take a look. I just want to show you the check. Here it is, right? Again, this amount, right, is a credit to this account, and this amount is a debit to accounts payable. Right? If we wrote check directly, again, remember, because we already booked the invoice. If we didn't book the invoice and we just wrote the check, it'd be different. But in this case, First we booked the invoice, accounts payable went up, expenses went up. Then we paid it, expenses are no longer touched, right? At this point, we're just reducing our bank account and we're reducing the liability. Alright, so here's our Tri-County bill. Again, please note that in this case we're paying less than the amount because we have a credit memo. Let's go ahead and pay those. Here it is, and you see it's 185 because again the 335 minus 150 is 185. So here it is. Let's set the date to 27. All right. So again, what's happening here is that accounts payable is reduced by 185 because we already reduced it by 150 when we got the credit memo, and then obviously our bank account, which we will use to pay it, will be reduced 185. So here it is. Let's assign check number to this. Pay selected bills. All right, 106. Oops, there's 6. Here it is. Okay. Done. And again, I'm going to just show it to you again on the first one. That here it is. Right, here's 185. Again, even though the bill amount was 335, the amount due 185 because we have a credit memo. That's it. All right. Again, this amount right here is a credit to account 10,100 right here, and it is also a debit to account 20,000, which is accounts payable account. Again, expenses are not affected when we pay bills. They're affected when we enter it. Very common question I get asked. All right, what else we have? We have one more, and that's to pay the invoice for mobile services. Very straightforward, very similar. Accounts payable reduced, bank account is reduced since we're paying it that way. So again, pay bills, that's our only bill remaining. Even though it's due in February, we're going to pay it this month on 26. Here it is. Let's see, let's assign the check number. This is 125. Here it is, done. All right, let's take a quick look. This is our check, 1690, mobile services. Okay, what's happening is our accounts payable is reduced by 690, right? Because again, we increased it when we booked the invoice, and we paid it using our bank account, so our bank account is reduced as well. So again, let's take a look. Right here, here it is, right? We can see that our mobile services invoice is settled, and it's not shown here, but we know that account 20,000 is impacted, and the other account that is impacted is shown right here, 10,100. That concludes entering invoices and paying them, and entering credit memos and paying them using our general account, bank account for the month of January.